So 2025 is going to be your first year making $1,000 in the stock market. Now I know what you're thinking already. Luca, I have a 9 to 5. How can I possibly have the time to trade and make money? As an individual who's traded for years and made a lot of money in the stock market, I can tell you that there's so many simple ways to make money while still working a 9 to 5. Now, what I first recommend is watching my video on how to plan your financial New Year's resolution. I'm gonna leave the link in the video below. Definitely watch that because it's gonna play into the savings account of your money and how you can then use that money to make your first $1,000 in the stock market. The first thing you need to do is this. You need to set a goal. Now, how do you begin by setting a goal? The first thing you need to do is you need to figure out how much money you are willing to invest. Now, there's different ways to figure this out. And for this example, we're gonna use a simple number. We're gonna use $10,000. But once you figure out the amount of money that you're willing to invest, then you need to figure out how much you want to make on a return. Now, most people will tell you that the stock market generates about 10 to 15% a year. And I will say this, for me, I usually tend to pick about 15 to 20% return on investment. Now, what you need to do after that is to pick a platform to trade on. Now, there's plenty of platforms out there. There's Thinkorswim, there's E-Trade, there's Robinhood. Now, whatever platform you choose to use, that will be something that you need to understand how to execute a trade on. Now, that could be another video where we discuss how to execute trades on other platforms. Once you do decide what platform you choose to use, the next thing you need to do is to start small. You need to understand that you just can't go in and invest all your money at one time. I always say invest about 25%. So in the example, we're using about $10,000. So we would say $2,500. You want to buy stocks that are about $2,500 worth. And at the end of this video, I'm going to share with you my best strategy to enter a stock at the right price. So you've purchased a stock. Now, one of the easiest things to do is to purchase index stocks. The reason I always refer people to purchase index stocks is that it takes it away from you being the individual hand-picking stocks. It's been shown that individuals who hand-pick stocks tend to lose more times than individuals who purchase index stocks. So it's always easier, especially an individual who's working a 9 to 5. You don't have the time to do the research on the company, to look at previous earnings and potential earnings and things like that. I always say it's best to purchase index stocks because one, it limits the amount of time you have to spend doing all that research because there's some other smarter money manager that's already put these stocks together and is doing most of the work for you. So what are good examples of index stocks? Well, for broad market index funds, you want to look at SPY, VTI, ITOT. These are broad market stocks or broad market ETFs that do really well. Now, if you're looking for dividend ETFs, I think it's important that you can look at things like VIG, DVY. And if you don't know what a dividend is payments that the company gives, just quarterly based off of the earnings. So it can be more lucrative because you get money paid out to you quarterly, but most of the time, especially these last few years, the ones that I listed did not do better than the general market overall. So it's just something to keep in mind. Now, my favorite time to enter a stock is when bad news does not affect the ultimate next quarter or quarters of the stock's earning. Now, I'll go into detail about what that means. If you remember, there was a few years ago when I think it was Elon Musk went on Joe Rogan's show, and I think he was smoking weed or whatever. If you remember, what ended up happening was the stock market pretty much beat up Tesla stock and any other companies he ran the next day. That was a great opportunity for someone to enter Tesla because if you think about it, he's probably been doing that months prior, years prior, leading up to that. So the outcome, unless he was to get kicked out as a CEO, that would then be a time where the numbers would have actually been affected because he would have left the CEO, right? But if you know, or if you think that the actions or whatever the bad news is not going to affect the stock, it is the best time to get into a stock. Why? Because the market beats it up. Even though the market normally trades 3 to 6 months in advance, in that moment, the market is going off of the emotions of the bad news. So when I hear bad news in the market, the first thing I do is I consider the bad news. Does this change anything for the next few quarters? And if it doesn't, it is almost a slam dunk time for you to get into the stock, because once that earning shows and comes back, once it's earning time and the company actually gets a chance to show its numbers, what you'll find is the stock market gives it all those gains most of the time, because that bad news just did not correlate with anything that affected the earnings. So once again, guys, if you found this video interesting, make sure to share it, like, and make sure to hit that subscribe button to help the channel out. And until next time.